Okay, good evening. Welcome to another live streaming of Basic Transfer Pricing Philippines. And our topic for tonight, we will continue with the explanations on the resale price method. We'll continue with the discussions on the transfer pricing method. In the past, or in the last live stream, we discussed about the comparable uncontrolled price method and also the resale price method. So the next three methods that we are going to discuss are the cost plus method, the transactional net profit, transactional net margin method, and the profit split method. So there are still three. Tonight, we will discuss on the resale price method, the explanations. Before that, Harry, shout out.
Wala pa pong comment.
Ilan yung ating YouTubers?
Sa YouTube, ma'am, 7. Sa Facebook po, 5.
Okay. So, shout out po sa ating YouTubers and sa Facebook. So, what are the example of the resale price method or the transaction? So, assume that there are two distributors. In the first place, ano ba itong resale price method that is used in transfer pricing? The resale price method is used when the party or the related parties are selling the product, purchase or acquire it, and then resell it, without any further processing. So that's the resale price method. And in the resale price method, we are comparing the gross profit, or the markup. So assume, example, this is the example for the resale price method. Assume that there are two distributors selling the same product in the same market under the same brand name. So distributor A offers a warranty, while distributor B offers none. So anong difference nila? Yung isa may warranty and the other none. So distributor A is not including the warranty as part of a pricing strategy, and so sells its product at a higher price, resulting in a higher gross profit margin. So if the cost of servicing the warranty are not taken into account than that of distributor B, which sells at a lower price. So the two margins are not comparable until a reasonably accurate adjustment is made to account for that difference. And what is that difference? That is the warranty, because distributor A is not including the warranty, while distributor B includes the warranty. So you have to make an accurate adjustment on the cost of the warranty, account for that warranty in order to make them equal, in order to determine the arm's length price that should be charged for the selling of the product. So assume that a warranty is offered with respect to all products so that the downstream price is uniform. So distributor C performs the warranty function but is in fact compensated by the supplier through a lower price. Distributor D does not perform the warranty function, which is performed by the supplier. Products are sent back to the factory. Ibig sabihin, kung defective, However, distributor D's supplier charges D a higher price than is charged to distributor C, So if distributor C accounts for the cost of performing the warranty function as the cost of goods sold, then the adjustment in the gross profit margins for the differences is automatic. Why? Kasi charge niya sa cost of goods sold. And of course, kung affected yung cost of goods sold, then affected yung gross profit. However, if the warranty expenses are accounted for as operating expenses, there is a distortion in the margin which must be corrected. Kasi yung warranty, ilagay mo sa operating expenses, of course, the gross profit is not affected. So the reasoning in this case would be that if D performed the warranty itself, its supplier would reduce the transfer price, and therefore this gross profit margin would be greater. No? Kasi yung cost of the warranty accounts for the difference. No? Another, a company sells a product through independent distributors in 5 countries in which it has no subsidiaries. No? So the distributors simply market the product and do not perform any additional work. No? So in one country, the company has set up a subsidiary because this particular market is of strategic importance. No? So very important yung market, so they set up a subsidiary in that country. Because this particular market is of strategic importance, the company requires its subsidiary to sell only its product and to perform technical applications for the customers. So even if all other facts and circumstances are similar, if the margins are derived from independent enterprises that do not have exclusive sales arrangements or perform technical applications like those undertaken by the subsidiary, it is necessary to consider whether any adjustment must be made to achieve comparability. No? Because there are add-on services by the subsidiary, but the independent party, none. No? Okay, so that's about resale price method. Ano, Hari, may shout-out na?
Wala pa pong shoutout ma'am.
Okay. So let's continue with our discussion on the transfer pricing methods, and this time the third method is the cost plus. And how does this cost plus method work? This is the transfer pricing method that is internal, no? Why internal? Because the costs are internal, no? And then the company will add a markup. So that is why it is called cost plus the markup, no? Cost plus method. And this is used usually by service company, no? Okay. So the cost plus method begins with the cost incurred by the supplier of property or services in a controlled transaction for property transferred or services provided to an associated purchaser. No? An appropriate cost plus markup is then added to this cost to make an appropriate profit in light of the functions performed and the market conditions. So what is arrived at after adding the cost plus markup to the above cost may be regarded as an arm's length price of the original controlled transaction. No? So this method probably is most useful where semi-finished goods are sold between associated parties, where associated parties have concluded joint facility agreements on long-term buy and supply arrangements, or where the control transaction is the provision of services. So yun yung mga ideal na gumagamit ng cost plus. No? The cost plus markup of the supplier in the control transaction should ideally be established by reference to the cost plus markup that the same supplier earns in comparable and controlled transactions, or the internal comparable. So in addition, the cost plus markup that would have been earned is comparable transactions by an independent enterprises may serve as a guide, or the external comparable. No? So ano yung markup that would have been earned in comparable transactions, no, by independent enterprises. So yun yung external comparable. How about the internal? Earns in comparable uncontrolled transactions. Markup that the same supplier earns in comparable uncontrolled transactions, or the internal comparable. No? So we have two kinds of comparable, the internal and the external. Following the principle in Chapter 1, an uncontrolled transaction is comparable to a controlled transaction if it is a comparable uncontrolled transaction for purposes of the cost plus method if one of two conditions is met. Okay. So ano yung two conditions? A, none of the differences, if any, between the transactions being compared. Kaya masabi mo na comparable sila. Or between the enterprises undertaking those transactions materially affect the cost plus markup in the open market. Or letter B, reasonably accurate adjustments can be made to eliminate the material effects of such differences. In determining whether a transaction is a comparable uncontrolled transaction, for the purposes of the cost plus method, the same principles apply as described in paragraphs 2.9 to 2.34 for the resale price method. So halos hawig lang sila ng resale price such that the resale price and the cost plus method uses both the gross profit in comparing. No? Thus, fewer adjustments will be necessary to account for product differences under the cost plus method than the cap method. And it may be appropriate to give more weight to other factors of comparability described in Chapter 1, some of which may have a more significant effect on the cost plus markup than they do on price. No? So, as under the resale price method, okay, see paragraph 2.34, where there are differences that materially affect the cost plus markups earned in the controlled and uncontrolled transaction, for example, in the nature of the functions performed by the parties to the transactions. No? So, reasonably accurate adjustment should be made to account for such differences. No? So, maggagawa ka ngayon ng adjustment to account for the differences to make them similar. No? So, the extent and reliability of those adjustments will affect the relative reliability of the analysis under the cost plus method in particular cases. No? So, reliability of adjustments is very important because that will be the source of dispute between the examiner and the taxpayer. So, for example, assume that company A manufactures and sells toasters to a distributor that is an associated enterprise, and that company B manufactures and sells irons to a distributor that is an independent enterprise. No? And that the profit margins on the manufacture of basic toasters and irons are generally the same, no? In the small household appliance industry. The use of the cost plus method here presumes that there are no highly similar independent toasters manufacturers. No? So if the cost plus method were being applied, the markups being compared in the controlled and uncontrolled transactions would be the difference between the selling price by the manufacturer to the distributor and the cost of manufacturing the product divided by the cost of manufacturing the product. No? So, however, company A may be much more efficient in its manufacturing processes than company B, thereby enabling it to have lower costs. So, in this example, the difference lies on the efficient manufacturing process. As a result, even if company A were making irons instead of toasters and charging the same price as company B is charging for irons, no special condition were to exist, it would be appropriate for company A's profit level to be higher than that of company B. Bakit? Because nga maganda yung kanyang process, no? Efficient. So A's profit level to be higher than that of company B. Thus, unless it is possible to adjust for the effect of this difference on the profit, the application of the cost application, particularly in the determination of cost. No? So, although it is true that an enterprise must cover its cost over a period of time to remain in business, those costs may not be the determinant of the appropriate profit in a specific case for any 1 year. No? So, while in many cases companies are driven by competition to scale down prices by reference to the cost of creating the relevant goods or providing the relevant service. No? So there are other circumstances where there is no discernible link between the level of cost incurred and a market price. No? Where a valuable discovery has been made and the owner has incurred only small research cost in making it. No? So yun yung difficulties ng cost plus method. No? Okay, sa determination ng cost. Kasi gross profit pa rin, no? May mga factors dyan affecting the cost over a period of time to remain in business, no? Okay, so they are the determinant of the appropriate profit in a certain situation or transaction. So in addition, when applying the cost plus method, one should pay attention to apply a comparable markup to a comparable cost basis. So the markup is very important. Why? Because the cost plus the markup is responsible, no, for the operating expenses. So the markup, doon pa i-charge yung operating expenses. That's why very careful, no? Kasi baka lugi lang yung company. So for instance, if the supplier to which reference is made in applying the cost plus method in carrying out its activities employs leased business assets, no? So the cost basis might not be comparable without adjustment if the supplier in the control transaction owns its business assets, no? Kasi yung lilist lang ng business assets. Okay. The cost plus method relies upon a comparison of the markup on cost achieved in a control transaction and the markup on cost achieved in one or more comparable uncontrolled transactions. Therefore, differences between the controlled and uncontrolled transactions that have an effect on the size of the markup must be analyzed to determine what adjustments should be made to the uncontrolled transaction respective markup. No? So for this purpose, it is particularly important to consider differences in the level and type of expenses. Consideration of these differences may indicate the following. Okay. So, paano mo i-consider yung mga expenses? If expenses reflect a functional difference, no? So, na-pinpoint mo based on your analysis, the expenses reflect a functional difference, taking into assets used and the risk assumed, which has not been taken into account in applying the method, and adjustment to the cost plus markup may be required. No? So, i-require yung adjustment. If the expenses reflect additional functions that are distinct from the activities tested by the method, then separate those functions need to be determined. If such functions may, for example, amount to the provision of services for which an appropriate reward may be determined. No? Kasi the services rendered should be properly rewarded, no, at arm's length. Similar expenses that are the result of capital structures reflecting non-arm's length arrangement may require separate adjustment, no, if there is any particular situation. If differences in of the parties being compared merely reflect efficiencies or inefficiencies of the enterprises, so that's the reason why there are differences, no? The efficiencies or inefficiencies. As would normally be the case for supervisory, general, and administrative expenses, then no adjustment to the gross margin may be appropriate. No? So, hindi sila talaga equal. In any of the above circumstances, it may be appropriate to supplement the cost plus and resale price methods by considering the results obtained from applying other methods. Okay. So you have to try the other methods. Another important aspect of comparability is accounting consistency. Ano yun? The accounting treatment natin. How do we value? how do we recognize the assets? No? How do we expense the account or capitalize? Where the accounting practices differ in the control transaction and the uncontrolled transaction, appropriate adjustment should be made to the data used to ensure that the same type of costs are used in its case to ensure consistency. No? So the gross profit markups must be measured consistently between the associated enterprise and the independent enterprise. No? So in addition, there may be differences across enterprises in the treatment of costs that affect gross profit markups that would need to be accounted for in order to achieve reliable comparability. No? So in some cases, it may be necessary to take into account certain operating expenses in order to achieve consistency and comparability. In these circumstances, the cost-plus method starts to approach a net rather than gross profit analysis. No? So, to the extent that the analysis takes into account operating expenses, its reliability may be adversely affected for the reasons set forth in paragraphs 2.70 to 2.73. Thus, the safeguards described in paragraph 2.74 to 2.81 may be relevant in assessing the reliability of such analysis. No? Kasi kung sa gross profit natin, no, the cost plus markup, kung isama mo na yung operating expenses, then hindi na siya gross profit, mag-iiba ka na ng method. No? So while precise accounting standards and terms may vary in general, the cost and expenses of an enterprise are understood to be divisible into three broad categories. No? So pwede daw i-divide yung expenses sa broad categories. First, there are the direct cost of producing a product or service. No? So yun yung unang category, which although closely related to the product, common to several products or services, no? Like the cost of repair department that services equipment used to produce different products. No? Finally, there are the operating expenses of the enterprise as a whole, such as supervisory, general, and administrative expenses. Okay. Okay. The distinction between gross and net profit analysis may be understood in the following terms. In general, the cost-plus method will use markups computed after direct and indirect cost of production, while a net profit method will use profits computed after operating expenses of the enterprise as well. No? So, it must be recognized that because of the variation in practice among countries, it is difficult to draw any precise lines between the three categories described above. No? So for example, an application of the cost-plus method may in a particular case include the consideration of some expenses that might be considered operating expenses, as discussed in paragraph 2.52. No? So, nevertheless, the problems in delineating with mathematical precision in the boundaries of the three categories described above do not alter the basic practical distinction between the gross and net profit approaches. No? So ano yung gross profit approaches natin na method, the resale price and the cost plus. The net profit approaches natin yung profit split and the transactional net margin method. No? Okay. So in principle, historical cost should be attributed to individual units of production, although admittedly the cost plus method may overemphasize historical cost. No? Some cost, for example, cost of materials, labor, and transport will vary over a period, and in such a case, it may be appropriate to average the cost over the period. No? Averaging also may be appropriate across product groups or over a particular line of production. No? So further, averaging may be appropriate with respect to the cost of fixed assets, where the production or processing of different products is carried on simultaneously and the volume of activity fluctuates. Costs such as replacement cost and marginal cost also may need to be considered, where this can be measured and they result in a more accurate estimate of the appropriate profit. No? So, very particular tayo sa cost plus on the cost and the gross profit. The costs that may be considered in applying the cost plus method are limited to those of the supplier of goods or services, kaya nga direct cost. This limitation may raise a problem on how to allocate some cost between suppliers and purchasers. There is a possibility that some cost will be borne by the purchaser in order to diminish the supplier's cost based on which the markup will be calculated. No? So in practice, this may be achieved by not allocating to the supplier and appropriate share of overheads and other costs borne by the purchaser, often the parent company, for the benefit of the supplier, often a subsidiary. So the allocation should be undertaken based on an analysis of functions performed, taking into account assets used and risk assumed, no, by the respective parties as provided in Chapter 1. A related problem is how overhead cost should be apportioned, no, yung overhead. So whether by reference to turnover, number of, or cost of employees, or some other criterion, no? So the issue of cost allocation is also discussed in Chapter 8 on cost contribution arrangement, no? Because in some cases, the cost under the cost-sharing arrangement should be divided among the members of the group or the participants of the project. No? So in some cases, there may be a basis for using only variable or incremental or marginal cost because the transactions represent a disposal of marginal production. No? So such a claim could be justified if the goods could not be sold at a higher price. So in the relevant foreign market, see also the discussion of market penetration in Chapter 1. Factors that could be taken into account in evaluating such a claim include information on whether the taxpayer has any sales of the same or similar products in that particular foreign market, the percentage of the taxpayer's production in both volume and value terms, that the claim marginal production represents the term of the arrangement, and details of the marketing analysis that was undertaken by the taxpayer or M&A group, which led to the conclusion that the goods could not be sold at a higher price in that foreign market, no? Especially yung mga regulated na market and commodities or goods. Okay, so no general rule can be set out that deals with all cases. No? The various methods for determining cost should be consistent as between the controlled and uncontrolled transactions and consistent over time in relation to particular enterprises. Example, in determining the appropriate cost plus markup, it may be necessary to take into account whether products can be supplied by various sources at widely differing cost. No? So you have to determine that. Associated enterprises may choose to calculate their cost plus basis on a standardized basis. No? So an independent party probably would not accept to pay a higher price resulting from the inefficiency of the other party. The associated enterprise may agree in advance which cost would be acceptable as a basis for the cost plus method. No? So it is important, no, which cost would be acceptable. At anong klaseng cost siya? Direct cost. Why? Because we want to come up or we want to compute with the gross profit. No? Okay. So these are the examples of the application of the cost plus method. May shoutout na, Hari.
Wala pa po nag-comment po eh. Pero may viewers tayo na 25 po eh sa Facebook.
And then,
Sa YouTube po may 9.
okay, so shoutout po sa mga Facebook friends natin. Thank you very much for watching and also for sa YouTubers natin. No? So what I am reading to you right now is the OECD transfer pricing guidelines on the transfer pricing methods. No? So bakit ko binabasa sa inyo? Because I don't want to make comment or opinions. No? So word for word, binabasa ko sa inyo so that wala tayong misinterpretation. No? Kasi maingat tayo pagdating sa batas. No? So, A, ito po yung example dito sa ano ko. So, kaya napapansin ninyo, minsan ang ginagawa ko, tinatranslate ko lang. But I never give opinion. No? So, itong example ng cost plus method, no? Para mas maintindihan. A is a domestic manufacturer of timing mechanism for mass market clocks. No? A sells this product to its foreign subsidiary B. No? Si A, manufacturer, si B is the foreign subsidiary. A earns a 5% gross profit markup with respect to its manufacturing operation. X, Y, and Z are independent domestic manufacturers of timing mechanisms for mass market watches. No? X, Y, and Z sells to independent foreign purchases. X, Y, and Z earn gross profit markups with respect to their manufacturing operations that range from 3% to 5%. No? So A accounts for supervisory, general, and administrative costs as operating expenses. No? So anong ginawa niya sa supervisory, general, and administrative costs? Consider it as operating expenses. And thus, these costs are not reflected in cost of goods sold. No? So hindi na sila kasama kasi nasa taas yun eh. Yung mga operating expenses nasa baba na yun. No? After gross profit. The gross profit markups of X, Y, and Z, however, reflect supervisory, general, and administrative cost as part of cost of goods sold. So mali, no? Therefore, the gross profit markups of X, Y, and Z must be adjusted to provide accounting consistency. Why? Kasi hindi pwede na yung supervisory, general, administrative cost part ng cost of goods sold. Operating expenses yan, no? Okay. So, dapat lang daw provide accounting consistency. Okay. Company C in Company D is 100% subsidiary of Company E located in country F, no? So, in comparison with country F, wages are very low in country D at the expense and risk of Company E, no? Television sets are assembled by Company C. All the necessary components, know-how, and others are provided by Company E. No? So the purchase of the assembled product is guaranteed by Company E in case the television sets fail to meet certain quality standard. No? So after the quality check, the television sets are brought at the expense and risk of Company E. No distribution centers Company E has in several countries. So the function of Company C can be described as a purely contract manufacturing in the agreed quality and quantity. So the basis for applying the cost plus method will be formed by all the costs connected to the assembling activities. No? So yun yung risk ng Company C. Okay. Company A of an M&E group agrees with Company B of the same M&E group to carry out contract research for Company B. This is another example. At ano yung example dito? Yung contract research, no? So, sino magkikerry ng contract research? Si Company B. All risks related to the research are assumed by Company B, no? So this company also owns all the intangibles. developed through the research and therefore has also the profit chances resulting from the research. No? So this is a typical setup for applying a cost-plus method. All costs for the research which the associated parties have agreed upon have to be compensated. No? So, sa arm's length natin, ano ang nire-require? The arm's length compensation. No? The additional cost plus may reflect how innovative and complex the research carried out is. No? So, kung may additional cost pa, depende na yan kung gaano ka innovative yung or complicated yung research. Okay, so doon po sa mga nanonood sa atin, we will entertain naman po questions even if hindi po siya related dito sa topic natin. No? Our topics for tonight is the transfer pricing methods. No? We start with the resell price method. And yung pangalawa natin is the cost plus method. No? So ano itong mga transactional profit methods? No? Excuse me. Okay. So ano itong transactional profit methods? Ito yung dalawang methods, no? Kasi yung tatlo, yung una, yun yung traditional, no? Yung cost plus method, the resell price method, and the comparable and controlled price method. So itong transactional profit methods, ito naman yung transactional net margin method and the profit split method. No? So this part provides a discussion of transactional profit methods that may be used to approximate arm's length conditions where such methods are the most appropriate to the circumstances of the case. No? See paragraph 2.1 and 2.12. Transactional profit methods examine the profits that arise from particular transactions among associated enterprises. The only profit methods that satisfy the arm's length principle are those that are consistent with Article 9 of the OECD Model Tax Convention and follow the requirement for a comparability analysis as described in these guidelines. No? So, so-called comparable profits methods or modified cost plus or resell price methods are acceptable only to the extent that they are consistent with these guidelines. No? Yung sinasabi nila na modified cost plus or modified resell price method. No? Okay. Wala pang ano?
Wala pang question.
Ilan yung viewers natin?
Viewers po tayong 17 ma'am sa Facebook.
Sa YouTube?
Sa YouTube po 8.
Okay. So shout out sa ating mga viewers. No? Transactional profit method examines the profits that arise from particular controlled transactions. The transactional profit methods for purposes of these guidelines are the transactional profit split method and the transactional net margin method. No? So profit arising from a controlled transaction can be a relevant indicator of whether the transaction was affected by conditions that differ from those that would have been made by independent enterprises or otherwise comparable circumstances. So, if they are not same with the independent enterprises, the transactions, commercial and financial transactions, then the transaction is not arm's length. No? And what are we trying at? To arrive in the study of transfer pricing, we want to arrive at the arm's length price. No? So transactional net margin method in general, the transactional net margin method examines the net profit, no? So relative to an appropriate base, the cost sales assets, no? That a taxpayer realizes from a controlled transaction or transactions that are appropriate to aggregate, no? Under the principles of paragraphs 3.9, 3.12. Thus, a transactional net margin method operates in a manner similar to the cost plus and resell price methods. This similarity means that in order to be applied reliably, the transactional net margin method must be applied in a manner consistent with the manner in which the resell price or cost plus method is applied. No? So this means in particular that the net profit indicator of the taxpayer from the controlled transaction or transactions that are appropriate to aggregate under the principles of paragraph 3.9-3.12 should ideally be established by reference to the net profit indicator that the same taxpayer earns in comparable uncontrolled transactions. Okay, so by reference to internal comparables, where there is not possible the net margin that would have been earned in comparable transactions by an independent enterprise or the external comparables may serve as guide. No? So paragraph 3.29 to 3.35. A functional analysis of the controlled and uncontrolled transactions is required to determine whether the transactions are comparable and what adjustments may be necessary to obtain reliable results. So further, the other requirements for comparability, and in particular those of paragraphs 2.74 to 2.81, must be applied. No? Okay. So a transactional net margin method is unlikely to be reliable if its party to a transaction makes unique and valuable contribution. See paragraph 2.4. No? So in such a case, a transactional profit split method will generally be the most appropriate method. No? See paragraph 2.115. However, a one-sided method or the traditional transaction method or transactional net margin method may be applicable in cases where one of the parties makes all the unique and valuable contributions involved in the controlled transaction, while the other party does not make any unique and valuable contribution. So, the other party, mayroon siyang valuable contribution, the other party has none. So, in such a case, the tested party should be the less complex one. No? So, see paragraph 3.18 to 3.19 for a discussion of the notion of tested party. No? Sa mga seminar natin in certificate program for certificate program in transfer pricing, may mga diagram po tayo doon na in-explain natin itong mga kind of transfer pricing methods, no? Dito naman, ang sinasabi lang natin dito kung what really the guideline said about this, no? So, there are also many cases where a party to a transaction makes contributions that are not unique. No? So uses non-unique intangibles such as non-unique business processes or non-unique market knowledge. No? So in such cases, it may be possible to meet the comparability requirements to apply a traditional transaction method or a transactional net margin method because the comparables would also be expected to use a comparable mix of non-unique contributions. So, in that case, pwede mo gamitin yung traditional transaction method, which is the comparable uncontrolled price method, the resell price method, and the cost plus method. And also, pwede mo rin gamitin yung transactional net margin method and the profit split method. Why? Because the intangibles are non-unique. So, meaning, both of them may use that kind of intangibles. No? So finally, the lack of unique and valuable contributions involved in a particular transaction does not automatically imply that the transactional net margin method is the most appropriate method. So, ang sabi ng guideline, the circumstances of the case or the facts, determine first the facts and circumstances of the case. So, do not assume. No? Okay. So, here's the strengths and weaknesses, no, ng transactional net margin method. One strength of the transactional net margin method is that net profit indicators, yung net profit indicators can be return on assets, can be operating income to sales, or possibly other measures of net profit are less affected by transactional differences than is the case with price, no? Kasi ang price, very sensitive yan sa characteristic lang ng product na pwedeng magbago na yung price, no? As used in the CAP method. No? So, net profit indicators also may be more tolerant to some functional differences between the controlled and uncontrolled transactions than gross profit margins, no? So, differences in the functions performed between enterprises are often reflected in variations in operating expenses, no? So, consequently, this may lead to a wide range of gross profit margins but still broadly similar levels of net operating profit indicators. So in addition, in some countries, the lack of clarity in the public data with respect to the classification of expenses in the gross or operating profits may make it difficult to evaluate the comparability of gross margins, while the use of net profit indicators may avoid the problem, no? Okay. Ano itong mga net profit indicators, no? So another practical strength of the transactional net margin method is that, as with any one-sided method, it is necessary to examine a financial indicator for only one of the associated enterprises or the tested party. Similarly, it is often not necessary to state the books and records of all participants in the business activity on a common basis, or to allocate cost for all participants as in the case with the transactional profit split method, no? Kasi sa profit split, you allocate the profit. That's why lahat ng contributions ng member of the group kailangan mong tingnan, no? So this can be practically advantageous when one of the parties to the transaction is complex and has many interrelated activities, no? So that makes the your analysis also complicated. Or when it is difficult to obtain reliable information about one of the parties. However, a comparability, including functional analysis, must always be performed in order to appropriately characterize the transaction between the parties and choose the most appropriate transfer pricing method. And this analysis generally necessitates the same information on the 5 comparability factors in relation to the controlled transactions be collected on both the tested and the non-tested parties, no? See paragraphs 3.2 and 3 to 3.23, no? Okay, so yun yung mga strengths and weaknesses ng transactional profit method, no? So there are also a number of weaknesses to the transactional net margin method. The net profit indicator of a taxpayer can be some factors that would either not have an effect or have a less substantial or direct effect on price or gross margins between independent parties. Why? These aspects may make accurate and reliable determination of arm's length net profit indicators difficult. Why? Kasi we are using the net margin. At ano ba yung net margin natin? You arrive at the net margin, yung bottom line na sa income statement. No? So you start with the sales or gross receipt less direct cost or cost of sales equals gross profit less operating expenses. So in the operating expenses, napakarami ng factor that sometimes hindi naman talaga nag-affect doon sa profit, no? So these aspects may make accurate and reliable determination of arm's length net profit indicators difficult, no? So mahirap. Thus, it is important to provide some detailed guidance on establishing comparability for the transactional net margin method as set forth in paragraphs 2.74-2.81 below, no? So application of arm's length method requires information on uncontrolled transactions that may not be available at the same time of the controlled transactions, no? This may make it particularly difficult for taxpayers that attempt to apply the transactional net margin method at the time of the controlled transactions. So, although use of multiple year data as discussed in paragraphs 3.75 to 3.79 may mitigate this concern. So in addition, taxpayers may not have access to enough specific information on the profits attributable to comparable and controlled transactions to make a valid application of the method. No? So kulang yung information. It also may be difficult to ascertain revenue and operating expenses related to the controlled transactions to establish the net profit indicator used as the profit measure for the transactions. No? So, since net margin yan, so net profit indicator yung gagamitin mo as a profit measure for the transactions. No? Tax administrators may have more information available to them from examination of other taxpayers. Of course, why? Kasi the tax authority are building up information no? Or having a warehouse of information. So see paragraph 3.36 for a discussion of information available to tax administrators that may not be disclosed to the taxpayer. Yung mga secret comparables kasama doon. And paragraphs 3.67 to 3.79 for a discussion of timing issues. No? So may tinatawag tayo na timing issues. Okay. So like the resell price and cost plus method, the transactional net margin method is applied to only one of the associated enterprises. So the fact that many factors unrelated to transfer prices may affect net profits in conjunction with the one-sided nature of the analysis under this method can affect the overall reliability of the transactional net margin method if an insufficient standard of comparability is applied. No? So detailed guidance on establishing comparability for the transactional net margin method is given in section B.3.1 below. No? So there may also be difficulties in determining an appropriate corresponding adjustments when applying the transactional net margin method. So particularly where it is not possible to work back to a transfer price. No? So this could be the case, for example, where the taxpayer deals with associated enterprises on both the buying and the selling sides of the controlled transaction. Also in such a case, if the transactional net margin method indicates that the taxpayer's profit should be adjusted upwards, no, there may be some uncertainty about which of the associated enterprises profit should be reduced. No? So yun yung weakness ng transactional method. No? So, before we go on, wala pang ano, Hari? Walang shout out. Walang shout out, no? So, before I start with the guidance for the application of these two methods, no, break lang tayo sandali ng 5 minutes. Huwag mo nang patay. Okay, so let me explain to you yung transfer pricing methods, no? The transfer pricing methods are used to compare transactions, financial and commercial transactions of the related party transactions and that of independent transactions in order that the arm's length price could be determined, no? So yun yung arm's length principle adopted by transfer pricing as the internationally accepted principle, no? So let's go to the transactional net margin method, no? So in the transactional net margin method, we compare the net margin, no? So here is the guidance for the application of this method. Okay. The comparability standard to be applied to the transactional net margin method. Okay. So comparability analysis must be performed in all cases, no? So in all cases. Why? Because comparability is the heart of transfer pricing, no? So comparability analysis must be performed in all cases in order to select and apply the most appropriate transfer pricing method, and the process for selecting and applying a transactional net margin method should not be less reliable than for other methods. So as a matter of good practice, the typical process for identifying comparable transactions and using data so obtained, which is described at paragraph 3.4, or any equivalent process designed to ensure robustness of the analysis, should be followed when applying a transactional net margin method, just as with any other method. So that being said, it is recognized that in practice, the level of information available on the factors affecting external comparable transaction is often limited, no? So determining a reliable estimate of an arm's length outcome requires flexibility and the exercise of good judgment, no? So requires flexibility and exercise of good judgment, no? So you cannot do that without any complete information, no? See paragraph 1.13. Okay. So prices are likely to be affected by differences in products, and gross margins are likely to be affected by differences in functions. But net profit indicators are less adversely affected by such differences. So iba naman ang indicators, no? Net profit indicators. As with the resell price and cost plus methods that the transactional net margin method resembles, this does not mean that a mere similarity of functions between two enterprises will necessarily lead to reliable comparisons. So, assuming similar functions can be isolated from among the wide range of functions that enterprises may exercise, in order to apply the method, the net profit indicators related to such functions may still not be automatically comparable, where, for instance, the enterprises concerned carry on those functions, no? So in different economic sectors or markets with different levels of profitability. So when the comparable uncontrolled transactions being used are those of an independent enterprise, then a high degree of similarity is required in a number of aspects of the associated enterprise and the independent enterprise involved in the transactions in order for the controlled transactions to be comparable, no? So that's required. 3, there are various factors other than products and functions that can significantly influence net profit indicators, no? So various factors. The use of net profit indicators can potentially introduce a greater element of volatility, no? Volatility into the determination of transfer prices for 2 reasons. First, net profit indicators can be influenced by some factors that do not have an effect or have a less substantial or direct effect on gross margins and prices, no? So because of the potential for variation of operating expenses across enterprises, Second, net profit indicators can be influenced by some of the same factors, such as competitive position that can influence price and gross margins, but the effect of these factors may not be as readily eliminated. No? So in the traditional transaction methods, the effect of these factors may be eliminated as a natural consequence of insisting upon greater product and function similarity, depending on the facts and circumstances of the case, and in particular on the effect of the functional differences on the cost structure and on the revenue of the potential comparables. So net profit indicators can be less sensitive than gross margin to differences in the extent and complexity of functions and to differences in the level of risk. No? So assuming the contractual allocation of risk is arm's length in accordance with section D.1.2.1 of chapter 1. On the other hand, depending on the facts and circumstances of the case, and in particular on the proportion of fixed and variable cost, the transactional net margin method may be more sensitive than the cost plus or resale price methods to differences in capacity utilization, because differences in the levels of absorption of indirect fixed cost, the fixed manufacturing cost or fixed distribution cost, would affect the net profit indicator, no? But may not affect the gross margin or gross markup on cost if not reflected in price differences. No? So there is an Annex 1 to Chapter 2, the sensitivity of gross profit and net profit indicators, no? That is being analyzed in the last portion of the guidelines. No? So net profit indicators may be directly affected by such forces operating in the industry as follows: threat of new entrants, competitive position, management efficiency, and individual strategies. Threat of substitute products, varying cost structures, as reflected, for example, in the age of plant and equipment, no? Differences in the cost of capital, self-financing versus borrowing, no? And the degree of business experience, whether the business is in a startup phase or is mature, no? Bago lang o tagal na sa business ang entity. Each of these factors in turn can be influenced by numerous other elements. For example, the level of the threat of new entrants will be determined by such elements as product differentiation, capital requirements, government subsidies, and regulations. No? Some of these elements may impact the application of the traditional transaction methods. No? Assume, for example, that a taxpayer sells top quality audio players to an associated enterprise, and the only profit information available on comparable business activities is on generic medium quality audio player sales. No? So assume that the top quality audio player market is growing in its sales, has a high entry barrier, has a small number of competitors, and is with wide possibilities for product differentiation. So all of the differences are likely to have material effect on the profitability of the examined activities and compared activities. And in such a case would require adjustment. As with other methods, the reliability of the necessary adjustment will affect the reliability of the analysis. It should be noted that even if two enterprises are in exactly the same industry, the profitability may differ depending on their market shares, competitive positions, and others. No? So, mas specific ang differentiation ng transactional net margin. Okay. So it might be argued that the potential inaccuracies resulting from the above types of factors can be reflected in the size of the arm's length range. No? So the use of a range may, to some extent, mitigate the level of inaccuracy, but may not account for situations where a taxpayer profits are increased or reduced by a factor unique to that taxpayer. So in such a case, the range may not include points representing the profits of independent enterprises that are affected in a similar manner by a unique factor. The use of a range, therefore, may not always solve the difficulties discussed above. See discussion of arm's length ranges at paragraph 3.5 to 3.66. No? So the transactional net margin method may afford a practical solution to otherwise insoluble transfer pricing problems if it is used sensibly and with appropriate adjustment to account for differences of the type referred to above. The transactional net margin method should not be used unless the net profit indicators are determined from uncontrolled transactions of the same taxpayer in comparable circumstances, or where the comparable uncontrolled transactions are those of an independent enterprises. Because you cannot compare a controlled transaction to another controlled transaction. It should always be that compare the controlled transactions with the independent transactions. No? The differences between the associated enterprises and the independent enterprises that have a material effect on the net profit indicator being used. No? Are adequately taken into account. So many countries are concerned that the safeguards established for the traditional transaction methods may be overlooked in applying the transactional net margin method. Thus, where differences in the characteristics of the enterprises being compared have a material effect on the net profit indicators being used, it would not be appropriate to apply the transactional net margin method without making adjustment for such differences. The extent and reliability of those adjustments will affect the relative reliability of the analysis under the transactional net margin method. Also, see discussion of comparability adjustment at paragraph 3.47 to 3.54. No? So another important aspect of comparability is measurement consistency. No? So maybe accounting consistency. The net profit indicators must be measured consistently between the associated enterprise and the independent enterprise. Also, in addition, there may be differences in the treatment across enterprises of operating expenses and non-operating expenses affecting the net profits, such as depreciation and reserves or provisions that would need to be accounted for in order to achieve reliable comparability. Okay. So how do we select, no, or the selection of the net profit indicator? So determine a selection of the net profit indicator, no? In applying the transactional net margin method, the selection, okay pa yung audio natin, Hari? Okay. So in applying the transactional net margin method, the selection of the most appropriate net profit indicator should follow the guidance at paragraphs 2.2 and 2.8 in relation to the selection of the most appropriate method to the circumstances of the case. So, it should take account of the respective strengths and weaknesses of the various possible indicators, the appropriateness of the indicator considered in view of the nature of the controlled transaction. No? So determine in particular of reliable information, in particular on uncontrolled comparables, needed to apply the transactional net margin method based on that indicator, and the degree of comparability between controlled and uncontrolled transactions, including the reliability of comparability adjustments that may be needed to eliminate differences between them. So when applying the transactional net margin method based on that indicator, these factors are discussed below in relation to both the determination of the net profit and its weighting. No? So yung weight. ng net profit indicator, no? So determination of the net profit. Why very important the determination of the net profit? Because that is the factor that we compare, no? The net profit. Determination of the net profit. As a matter of principle, only those items that A, directly or indirectly relate to the control transaction at hand, and B, are of an operating nature should be taken into account in the determination of the net profit indicator for the application of the transactional net margin method. No? So in these guidelines, no, there is a thorough discussion of these methods. No? So 2.84, cost and revenues that are not related to the controlled transaction under review should be excluded where they materially affect comparability with uncontrolled transactions. An appropriate level of segmentation of the taxpayers' financial data is needed when determining or testing the net profit it earns from a controlled transaction or from transactions that are appropriately aggregated. No? So according to the guidance at paragraphs 3.9, 3.12, therefore, it would be inappropriate to apply the transactional net margin method on a company-wide basis. No? So if the company engages in a variety of different controlled transactions, that cannot be appropriately compared on an aggregate basis with those of an independent enterprise. No? So similarly, when analyzing the transactions between the independent enterprises, to the extent they are needed, profits attributable to transactions that are not similar to the control transactions under examination should be excluded from the comparison. So finally, when net profit indicators of an independent enterprise are used, the profit attributable to the transactions of the independent enterprise must not be distorted by controlled transactions of that enterprise. See paragraph 3.9. No? 3.9 to 3.12 on the evaluation of a taxpayer's separate and combined transactions, and paragraph 3.37 on the use of non-transactional third-party data. No? So, okay. So non-operating items, no? So such as interest income and expenses and income taxes should be excluded from the determination of the net profit indicator. No? Why? Because sa comprehensive income tax statement, diba, that is added on the income before income taxes. No? They are added. Exceptional and extraordinary items of a non-recurring nature, no, should generally also be excluded, no? Kasi hindi naman recurring. This, however, is not always the case, as there may be situations where it would be appropriate to include them depending on the circumstances of the case and on the functions being undertaken and risks assumed by the tested party. So you have to take its transfer pricing case as unique or differently, no? So always discover the facts and circumstances of the case, no? So even where exceptional and extraordinary items are not taken into account in the determination of the net profit indicator, it may be useful to review them because they can provide valuable information for the purpose of comparability analysis. For instance, by reflecting that the tested party bears a given risk, no? So in those cases where there is a correlation between the credit terms and the sales prices, it could be appropriate to reflect interest income in respect of short-term working capital within the calculation of the net profit indicator, and or to proceed with a working capital adjustment. See paragraph 3.47 to 3.54. So an example would be where a large retail business benefits from long-term credit terms with its suppliers and from short credit terms with its customers, thus making it possible to derive excess cash that in turn may make it possible to have lower sales prices to customers than if such advantageous credit terms were not available. No? So, whether foreign exchange gains and losses should be included or excluded from the determination of the net profit indicator raises a number of difficult comparability issues. First, it needs to be considered whether the foreign exchange gains and losses are of a trading nature. No? Example, exchange gain or loss on a trade receivable or payable, and whether or not the tested party is responsible for them. No? Second, any hedging of the foreign currency exposure on the underlying trade receivable or payable also needs to be considered and treated in the same way in determining the net profit. No? So in effect, if a transactional net margin is applied to a transaction in which the foreign exchange risk is borne by the tested party, foreign exchange gains or losses should be consistently accounted for, either in the calculation of the net profit indicator or separately. No? So for financial activities where the making and receiving of advances constitutes the ordinary business of the taxpayer, it will generally be appropriate to consider the effect of interest and amounts in the nature of interest when determining the net profit indicator. No? Because financial activities, the regular activity is financing, and therefore the ordinary income is interest. No? So difficult comparability issues can arise where the accounting treatment of some items by potential third-party comparables is unclear or does not allow reliable measurement or adjustment. No? See paragraph 2.81. No? This can be the case in particular for depreciation, amortization, stock option, and pension cost. No? So the decision whether or not to include such items in the determination of the net profit indicator for applying the transactional net margin method will depend on a weighing of their expected effects on the appropriateness of the net profit indicator to the circumstances of the transaction and on the reliability of the comparison. No? See paragraph 3.5. Whether startup cost and termination cost should be included in the determination of the net profit indicator depends on the facts and circumstances of the case and on whether in comparable circumstances. No? Remember, we are comparing. So independent parties would have agreed either for the party performing the functions to bear the startup cost and possible termination cost, or for part or all of this cost to be recharged with no markup, no, to the customer or a principal, or for part of all of this cost to be recharged with a markup. No? For instance, by including them in the calculation of the net profit indicator of the party performing the functions. No? So see Chapter 9, Part 1, Section F for a discussion of termination cost in the context of business restructuring. So in this guideline, napakahaba ng discussion on business restructuring. No? And napakaraming examples. No? Okay. So, B.3.4, weighting the net profit. No? So the selection of the denominator should be consistent with the comparability, no? Including functional analysis of the control transaction. And in particular, it should reflect the allocation of risk between the parties, no? Provided said allocation of risk is arm's length. See section D, point 1, point 2, point 1 in chapter 1. No? So for instance, capital-intensive activities such as certain manufacturing activities may involve significant investment risk, even in those cases where the operational risk such as market risk or inventory risk might be limited. No? So where a transactional net margin method is applied to such cases, The investment-related risks are reflected in the net profit indicator. No? So if the latter is a return on investment, return on assets, or return on capital employed, such indicator might need to be adjusted or a different net profit indicator selected depending on what party to the controlled transaction bears the risk, as well as on the degree of differences in risk that may be found in the taxpayer's controlled transaction and in comparables. See paragraph 3.47 to 3.54 for a discussion of comparability adjustments. So, the denominator should be focused on the relevant indicators of the value of the functions performed by the tested party in the transaction under review, taking account of its assets used and risk assumed. Typically, and subject to review of the facts and circumstances of the case, sales or distribution, operating expenses may be an appropriate base for distribution activities. Full cost on operating expenses may be an appropriate base for a service or manufacturing activity, and operating assets may be an appropriate base for capital-intensive activities, such as certain manufacturing activities or utilities. No? So, asset-intensive yun sila. Other bases can also be appropriate depending on the circumstances of the case. The denominator should be reasonably independent from controlled transactions. Otherwise, there would be no objective starting point. So for instance, when analyzing a transaction consisting in the purchase of goods by a distributor from an prices for sale against the cost of goods sold, because these costs are the controlled costs for which consistency with the arm's length principle is being tested. No? So similarly, for a controlled transaction consisting in the provision of services to an associated enterprise, one could not weight the net profit indicator against the revenue from the sale of services, because these are the controlled sales for which consistency with the arm's length principle is being tested. No? So where the denominator is materially affected by controlled transaction costs that are not the object, such as head office charges, rental fees, or royalties to an associated enterprise, caution should be exercised to ensure that said controlled transaction costs do not materially distort the analysis, and in particular, that they are in accordance with the arm's length principle. No? Because the arm's length principle is the accepted principle in transfer pricing. So the denominator should be one that is capable of being measured in a reliable and consistent manner. No? So reliable, consistent manner at the level of the taxpayer's controlled transaction. So in addition, the appropriate base should be one that is capable of being measured in a reliable and consistent manner at the level of the comparable and controlled transactions. No? So this in practice limits the ability to use certain indicators as discussed at paragraph 2.105 below. So further, the taxpayer's allocation of indirect expenses to the transaction under review should be appropriate and consistent over time. So consistency is important. Cases where the net profit is weighted to sales. No? So a net profit indicator of the net profit divided by sales, or net profit margin, is frequently used to determine the arm's length price of purchases from an associated enterprise for resale to independent customers. In such cases, the sales figure at the denominator should be the resales of items purchased in the controlled transaction under review. Sales revenue that is derived from uncontrolled activities purchased from independent parties for resale to independent parties, yan yung comparables, should not be included in the determination or testing of the remuneration for controlled transactions unless the uncontrolled transactions are such that they do not materially affect the comparison, and or the controlled and uncontrolled transactions are so closely linked that they cannot be evaluated adequately on a separate basis. One example of the latter situation can sometimes occur in relation to uncontrolled after-sales services or sale of spare parts provided by a distributor to independent end-user customer. So they are closely linked to controlled purchase transactions by the distributor for resale to the same independent end-user customers. For instance, because the service activity is performed using rights or other assets that are granted under the distribution arrangement. See also discussion of portfolio approaches in paragraph 3.10. No? So one question that arises in cases where the net profit indicator is weighted against sales is how to account for rebates and discounts that may be granted to customers by the taxpayer or the comparables. No? So depending on the accounting standards, rebates and discounts may be treated as a reduction of sales, no? revenue, or as an expense. Similar difficulties can arise in relation to foreign exchange gains or losses. No? So where such items materially affect the comparison, the key is to compare like with like and follow the same accounting principles for the taxpayer and for the comparables. No? Cases where the net profit is weighted to cost. No? So net profit weighted to cost. Cost-based indicators should only be used in those cases where costs are a relevant indicator of the value of the functions performed, assets used, and risk assumed by the tested party. So in addition, the determination of what cost should be included in the cost base should derive from a careful review of the facts and circumstances of the case, where the net profit indicator is weighted against cost. So only those costs that directly or indirectly relate to the controlled transaction and the review or transactions aggregated in accordance to the principle at paragraphs 3.9 to 3.12 should be taken into account. No? So accordingly, an appropriate level of segmentation of a taxpayer's account is needed in order to exclude from the denominator costs that relate to other activities or transactions and materially affect comparability with uncontrolled transactions. Moreover, in most cases, only those costs which are of an operating nature should be included in the denominator. The discussion at paragraph 2.86 to 2.91 above also applies to costs as denominator. No?
Question.
Okay.
Question po galing kay Sir Charles Serrato.
Okay.
Sabi niya, ma'am, good evening po. For claiming of input VAT,
Okay.
can we use receipts of purchases from previous quarters for the current quarter? Or we should amend the previous quarter?
Yes. Para sa akin na, although yung iba ginagawa nila yan, pero para sa akin, you amend the previous quarter where the input tax belongs but which were not included. And then kung may excess naman yan, you carry it over. So pasok pa rin siya sa following quarter. Pero ang dapat po talaga, kasi magkaka-timing difference kayo dyan, kung hindi mo siya declare doon sa date na na-incard mo siya. No? So dapat saan mo siya anong gagawin mo? You amend the quarter, the previous quarter. No? Wag yung current quarter mo na siya i-claim. Magkakaproblema ka doon sa date ng receipts. No? And also, magkaka-letter notice ka kung halimbawa overlapping na yung quarters mo, no? Ibang taxable year na, magkakaproblema ka, magkaka-letter notice ka. No? Okay, ano pa?
Wala, siya pa, wala na po.
Okay. So, diretso tayo, no? Okay. So, shout out pa rin, no? Ilan ba yung nanonood sa atin?
May nanonood pa sa atin, ma'am, na 12 sa Facebook.
Sa YouTube?
Sa YouTube po, 8.
Okay.
9.
Okay. So we're treating cost as pass-through cost is found to be arm's length. Alam nyo talagang ang transfer pricing, tiyagaan po talaga dito, I tell you. No? But anong mangyayari kung magtiyaga ka naman? Sabi ng iba, napakahirap ng transfer pricing. But pag nagtiyaga ka naman, then yung knowledge na mag-gain mo, sa iyo na yan. And when opportunity comes, then you will enjoy, you will be benefited by that opportunity. No? Kaya tiyagaan lang talaga. So we're treating cost as pass-through cost is found to be arm's length. A second question arises as to the consequences on comparability and on the determination of the arm's length range. No? Kaya pinagtatyagaan ko po ito na basahin sa inyo. Pwede nyo siyang balik-balikan. No? Kasi kung kayo lang ang magbasa, lilipad lang yun sa utak natin. No? At least during the time na naririnig nyo sa video, pwede nyo sabayan doon sa mga regulations mismo, no? So because it is necessary to compare like with like. So if pass-through costs are excluded from the denominator of the taxpayer net profit indicator, comparable costs should also be excluded from the denominator of the comparable net profit indicator. Comparability issues may arise in practice where limited information is available on the breakdown of the cost of comparables. So depending on the facts and circumstances of the case, actual cost as well as standard or budgeted cost may be appropriate to use as the cost base. No? Using actual cost may raise an issue because the tested party may have no incentive to carefully monitor the cost. In arrangements between independent parties, it is not rare that a cost savings objective is factored into the remuneration method. It can also happen in manufacturing arrangements between independent parties that prices are set on the basis of standard costs. No? And that any decrease or increase in actual cost compared to standard cost is attributed to the manufacturer, no? Kung may deviation. Where they reflect the arrangement that would be taken between independent parties, similar mechanism could be taken into account in the application of the cost base. Okay. So transactional net margin method. No? See paragraph 2.58 for a discussion of the same issue in relation to the cost plus method. The use of budgeted cost can also raise a number of concerns where large differences between actual cost and budgeted cost result. Independent parties are not likely to set prices on the basis of budgeted cost without agreeing on what factors are to be taken into account in setting the budget. So without having regard to how budgeted costs have compared with actual cost in previous years and without addressing how unforeseen circumstances are to be treated. No? So natutulog na yung ating ano? Okay. Sige. Cases where the net profit is weighted to assets, no? Okay. Returns on assets or on capital can be an appropriate base in cases where assets rather than cost or sales are a better indicator of the value added by the tested party. So in certain manufacturing or other asset-intensive activities and in capital-intensive financial activities, where the indicator is a net profit weighted to assets, no? Net profit weighted to assets, operating assets only should be used. Operating assets include tangible operating fixed assets. No? So, kaya nga sila operating assets. Including land and buildings, plant and equipment, operating intangible assets used in the business, such as patents and know-how, and working capital assets such as inventory and trade receivables. No? So, less trade payables. Investment and cash balances are generally not operating assets outside the financial industry sector. So, investment and cash balances, hindi sila operating assets, no? So, ano lang yung operating assets? The land, building, plant, equipment. In cases where the net profit is weighted to assets, the question arises how to value the assets at book value or market value. So using book value could possibly distort the comparison between those enterprises that have depreciated their assets and those that have more recent assets with ongoing depreciation, and between enterprises that use acquired intangibles and others that use self-developed intangibles. So using market value could possibly alleviate this concern, although it can raise other reliability issues where valuation of assets is uncertain and can also prove to be extremely costly and burdensome, especially for intangible assets. No? So depending on the facts and circumstances of the case, it may be possible to perform adjustments to improve the reliability of the comparison. The choice between book value, adjusted book value, market value, and other possibly available options should be made with a view to finding the most reliable measure, taking account of the size and complexity of the transaction and of the costs and burden involved. No? See Chapter 3, Section C. Other net profit indicators. So other net profit indicators may be appropriate depending on the facts and circumstances of the transactions. No? So for instance, depending on the industry and on the control transactions under review, it may be useful to look at other denominators where independent data may exist, such as floor area of retail point, weight of products transported, number of employees, time, distance, and others. No? So yun yung number of employees can be on your variables. No? So while there is no reason to rule out the use of such bases where they provide a reasonable indication of the value added by the tested party to the controlled transaction, they should only be used where it is possible to obtain reliable comparable information to support the application of the method with such a net profit indicator. No? So ano pa yung net profit indicator? We also have the Berry ratios. No? Berry ratios are defined as ratios of gross profit to operating expenses. No? How much is your gross profit and how much is the operating expenses? Interest and extraneous income are generally excluded from the gross profit determination. Depreciation and amortization may or may not be included in the operating expenses, depending in particular on the possible uncertainties they can create in relation to valuation and comparability. No? So the selection of the appropriate financial indicator depends on the facts and circumstances of the case. So you can always hear this statement, no? Depends on the facts and circumstances of the case. See paragraph 2.82. Concerns have been expressed that Berry ratios are sometimes used in cases where they are not appropriate. So these are the observations. Without the caution that is necessary in the selection and determination of any transfer pricing method and financial indicator. See paragraph 2.98 in relation to the use of cost-based indicators in general. So one common difficulty in the determination of Berry ratios is that they are very sensitive to classification of cost, of course, as operating expenses or not, and therefore can pose comparability issues. So in addition, the issues raised at paragraphs 2.99 to 2.100 above in relation to pass-through cost equally arise in the application of Berry ratios. So in order for a Berry ratio to be appropriate to test the remuneration of controlled transaction, for instance consisting in the distribution of products, it is necessary that the value of the function performed in the controlled transaction, taking account of assets used and risk assumed, is proportional to the operating expenses. No? Hindi yung mga overclaim. The value of the functions performed in the controlled transaction, taking account of assets used and risk assumed, is not materially affected by the value of the products distributed. So it is not proportional to sales. And the taxpayer does not perform in the controlled transactions any other significant functions. So manufacturing function that should be remunerated using another method of financial indicator. No? So a situation where very ratios can prove useful is for intermediary activities, no? Where a taxpayer purchases goods from an associated enterprise and on-sells them to other associated enterprises. So in such cases, the resale price method may not be applicable given the absence of uncontrolled sales and a cost-plus method that would provide for a markup on the cost of goods sold. No? So might not be applicable either where the cost of goods sold consists in controlled purchases. By contrast, operating expenses in the case of an intermediary may be reasonably independent from transfer pricing formulation, no? Unless they are materially affected by controlled transaction costs, such as head office charges, rental fees, or royalties paid to an associated enterprise. So that, depending on the facts and circumstances of the case, a very ratio may be an appropriate indicator subject to the comments above. No? So other guidance. Where it is not specific to the transactional net margin method, the issue of the use of non-transactional third-party data is in practice more acute when applying this method due to the heavy reliance on external comparables. No? The problem arises because there are often insufficient public data to allow for third-party net profit indicators to be determined at transactional level. No? So mahirap. This is why there needs to be sufficient comparability between the controlled transaction and the comparable uncontrolled transactions, given that often the only data available for the third parties are company-wide data. So the functions performed by the third party in its total operations must be closely aligned to those functions performed by the tested party with respect to its controlled transactions in order to allow the former to be used to determine an arm's length outcome for the latter. The overall objective is to determine a level of segmentation that provides reliable comparables for the controlled transactions based on the facts and circumstances of the particular case. No? So in case it is impossible in practice to achieve the transactional level set out as the ideal by these guidelines, it is still important to try to find the most reliable comparables as discussed at paragraph 3.2 through making suitable adjustment based on the evidence that is available. No? So before I forget, Hari, i-remind natin sila on the sa October 28, yung tax update natin. Ba? No? So kasama dyan yung preparation of segmented financial statements. No? Kasama dyan. Alam ko, binigyan na kita ng topics dyan. Wala pa? Yung para sa tax update? No? So that is via Zoom, a half day, 1 o'clock to 5 o'clock. No? So that is on Wednesday. See in particular paragraphs 3.18 to 3.19 for guidance on the tested party. No? So paragraphs 3.55 to 3.66 for guidance on the arm's length range, and paragraphs 3.75 to 3.79 for guidance on multiple year data. Okay. So what are the examples of the application of the transactional net margin method? No? So by way of illustration, the example of cost plus at paragraph 2.59 demonstrates the need to adjust the gross markup arising from transactions in order to achieve consistent and reliable comparison. So such adjustments may be made without difficulty where the relevant cost can be readily analyzed. Where, however, it is known that an adjustment is required, but it is not possible to identify the particular cost for which an adjustment is required. It may nevertheless be possible to identify the net profit arising on the transaction and thereby ensure that a consistent measure is used. No? So for example, if the supervisory, general, and administrative costs that are treated as part of cost of goods sold for the independent enterprises X, Y, and Z cannot be identified so as to adjust the markup in a reliable application of cost plus, it may be necessary to examine net profit indicators in the absence of more reliable comparisons. No? So a similar approach may be required where there are differences in functions performed by the parties being compared. No? Assume that the facts are the same as in the example at paragraph 2.44, except that it is the comparable independent enterprises that perform the additional function of technical support and not the associated enterprise, and that these costs are reported in the cost of goods sold but cannot be separately identified. No? So because of product and market differences, it may not be possible to find a cap, and the resale price method would be unreliable since the gross margin of the independent enterprises would need to be higher than that of the associated enterprise in order to reflect the additional function and to cover the unknown additional cost. So in this example, it may be more reliable to examine net margin in order to assess the difference in the transfer price that would reflect the difference in function. No? So the use of net margins in such a case needs to take account of comparability and may not be reliable if there would be material effect on net margin as a result of the additional function or as a result of market differences. No? So the facts are the same as in paragraph 2.42. However, the amount of the warranty expenses incurred by distributor A proves impossible to ascertain, so that it is not possible to reliably adjust the gross profit of A to make the gross profit margin properly comparable with that of B. No? However, if there are no other material functional differences between A and B, and the net profit of A relative to its sales is known, so it might be possible to apply the transactional net margin method to B by comparing the margin relative to A's sales to net profits with the margin calculated on the same basis for B. No?
Tanong po ulit, no?
Okay, sige.
Ngayon po ulit kay Sir Charles,
Okay.
sabi niya, ma'am, how much po ang penalty ng summary list of sales and purchases? Is it 1,000 per failure or 1,000 per receipt not reported, not exceeding 25,000?
Ang 25,000, 1 year yan eh. Pero depende sa district din, no? Kasi saka depende pag nakita nila na medyo malaki yung sales mo and then na late ka. Kasi depende sa, minsan yung mga district depende sa gross, no? So, kasi kung doon sila sa 1,000, ang 1,000 per summary list yan, hindi pwede na per receipt, no? Yung per receipt na 1,000 na violation, sa ano yan, during the tax mapping, na makita nila na may mga violations ka doon sa issuance mo ng receipts. Or, halimbawa, yung may mga receipts ka na iba yung original, iba yung duplicate, no? Yun, may mga bearing yan sa penalties. Pero, kung yung non-submission lang ng summary list of sales and purchases, yung pinakamalaki nila dyan is 25,000. Pero kung tingnan mo yung regulations, yung 25,000 na yan, for the whole year yan. So, there are 4 na quarters, no? Dapat. But in some cases, ang ginagawa nila, 25,000 yung isang non-submission, which is required yan quarterly, no? Yung ating VAT relief, no? Okay. Okay, so wala na. Okay, tuloy lang po natin, no? The transactional profit split method. The transactional profit split. So, the guidance contained in this section and in annexes 2 and 3 to Chapter 2 are expected to be revised to include the conclusions of the ongoing work of Working Party number 6 on the application of profit split methods. May mga changes na, no? This work mandated by Action 10 of the BEPS, yung Base Erosion and Profit Shifting Action Plan, is aimed at clarifying the application of transfer pricing methods, in particular, the transactional profit split method in the context of global value chains. No? So, in general, sa transactional profit split na tayo, no? So, in general, the transactional profit split method seeks to eliminate the effect on profits of special conditions made or imposed in a controlled transaction or in controlled transactions that are appropriate to aggregate under the principles of paragraph 3.9 to 3.12. So by determining the division of profits that independent enterprises would have expected to realize from engaging in the transaction or transactions. So the transactional profit split method first identifies the profits to be split, no? So identifies the profit to be split. Sino ba yung participants, no? Or contributor for the profits. So for the associated enterprises from the controlled transaction in which the associated enterprises are engaged or the combined profits, no? So references to profit should be taken as applying equally to losses. So ganun din sa loss. See paragraphs 2.130 to 2.137 for a discussion of how to measure the profits to be split. It then splits those combined profits between the associated enterprises on an economically valid basis that approximates the division of profits that would have been anticipated and reflected in an agreement made at arm's length, no? So see paragraphs 2.138 to 2.151 for a discussion of how to split the combined profits, no? Strength and weaknesses. The main strength of the transactional profit split method is that it can offer a solution for highly integrated operation for which a one-sided method would not be appropriate. So pagka highly integrated operations, pwede nang i-adapt mo yung profit split. So for example, see the discussion of the appropriateness and application of profit split methods to the global trading of financial instruments between associated enterprises in Part 3, Section C of the report on the attribution of profits to permanent establishment, no? So, a transactional profit split method may also be found to be the most appropriate method in cases where both parties to a transaction make unique and valuable contributions, no? So, contributed unique intangibles to the transaction because in such a case, independent parties might wish to share the profits of the transaction in proportion to their respective contributions, and a two-sided method might be more appropriate in these circumstances than a one-sided method. So in addition, in the presence of unique and valuable contributions, reliable comparables information might be insufficient, no? So to apply another method. On the other hand, a transactional profit split method would ordinarily not be used in cases where one party to the transaction performs only simple functions and does not make any significant unique contribution. For instance, contract manufacturing or contract service activities in relevant circumstances. As in such cases, a transactional profit split method typically would not be appropriate in view of the functional analysis of the party. So see paragraphs 3.38 to 3.39 for a discussion of limitations in available comparables methods, no? So where comparables data are available, they can be relevant in the profit split analysis to support the division of profits that would have been achieved between independent parties in comparable circumstances. Comparables data can also be relevant in the profit split analysis, no? To assess the value of the contributions that each associated enterprise makes to the transactions, no? So in effect, the assumption is that independent parties would have split the combined profits in proportion to the value of their respective contributions, no? That is fair enough, no? To the generation of profit in the transaction. On the other hand, the external market data considered in valuing the contribution each associated enterprise makes to the controlled transactions will be less closely connected to those transactions than in the case with the other available, no? So however, in those cases where there is no more direct evidence of how independent parties in comparable circumstances would have split the profit in comparable transactions, the allocation of profits may be based on the division of functions, no? So taking account of the assets used and risk assumed between the associated enterprises themselves. So it's hard to find for the basis of the split, no? So another strength of the transactional profit split method is that it offers flexibility, no, by taking into account specific, possibly unique facts and circumstances of the associated enterprises that are not present in independent enterprises, while still constituting an arm's length approach to the extent that it reflects what independent enterprises reasonably would have done if faced with the same circumstances, no? So a further strength of the transactional profit split method is that it is likely that either party to the controlled transaction will be left with an extreme and improbable profit result, since both parties to the transactions are evaluated. So this aspect can be particularly important when analyzing the contribution by the parties in respect of the intangible property employed in the control transaction. So this two-sided approach may also be used to achieve a division of the profits from economies of scale or other joint efficiencies that satisfies both the taxpayer and tax administrations. A weakness of the transactional profit split method relates to the difficulties in its application. So on first review, the transactional profit split method may appear readily accessible to both taxpayers and tax administrations because it tends to rely less on information about independent enterprises. However, associated enterprises and tax administrations alike may have difficulty assessing information from foreign affiliates. In addition, it may be difficult to measure combined revenue and cost for all the associated enterprises participating in the controlled transaction, which would require stating book and records on a common basis and making adjustment in accounting practices and currencies, no? So that's the difficulties in combining the profits. Further, when the transactional profit split method is applied to operating profit, it may be difficult to identify the appropriate operating expenses associated with the transactions and to allocate costs between the transactions and the associated enterprises' other activities, no? So since alanganin na tayo sa oras, no? So siguro next sa Wednesday naman natin pagpatuloy yung ating live streaming on this OECD transfer pricing guideline, which is the 2017 transfer pricing guidelines. No, for yung ating free na 2-day seminar on kailan yun, Hari? 16-17 ng November, no? So free po yan, but kailangan po nating mag-pre-registered on that. Ilan na yung nag-pre-registered sa atin?
May 120 po. Yung huli kong check out kanina.
Okay, so mag-generate ka na nung listing nila, ha? Kasi the attendance during that live seminar would be monitored because we will give a certificate, no? Certificate of attendance, no? So, ano pa, yung sa tax update natin, that would already be on Wednesday, no? So, siguro isama na din natin doon yung year-end adjustment kasi timely din naman na kailangan na November na. So, dapat mag-year-end adjustment tayo at saka yung mga requirements on withholding, especially the alpha list, no? Although yung last time na nasama na natin sa tax update yung inventory, no? So, those are very important. And since mag-year ending na, kasi November na, and then sa December, yung mga reports natin na kailangan na pwede na nating umpisahan para hindi crop up, magdami sila pagdating na ng January. Kasi pagdating ng January, there are so many deadlines, no? Ang dami nating dapat isubmit na mga reports. So that pagdating na ng December, unti-untiin na natin, no? Yung mga kumpleto na, or kaya umpisahan na natin so that pagdating ng year-end, meron na tayong, kunti na lang yung idagdag natin doon sa ating reports, no? So, with that, I would like to say thank you doon po sa ating mga YouTubers at saka sa ating mga Facebook friends. Thank you very much for watching and let's call it a night, no? So, see you again sa live streaming natin on Wednesday.